Welcome one, welcome all to the Node, brought to you by DeFi Crypto and Airdrops and DeFi University. I am Mike, aka Veteran Crypto, and with me as always is David from DeFi University. How's it going, brother?
I'm doing well today, Mike. Oh man, what a day yesterday, man. Long day. Feeling great today though. And look at oil, man, on a rocket ship.
Yes,
Yeah,
it
got a
is.
lot of news.
I knew I should have longed that shit, but as
Yeah.
usual, I didn't, and that's probably why it's pumping. So before we get too deep into it, let me share my screen. Let's see. I want to make sure everybody knows where to find us. So if you could, over here on X, this is our official account for the Node. It's at the Node channel, and this is where you can get any news, any posts, any information that we find when we're not live. Also you can watch us here. We don't have a YouTube channel yet, so we're using DeFi Crypto and Airdrops and also DeFi University. Tried again this morning, still nothing. So Google and YouTube, you suck. Moving right along, however, I do want to share this is DeFi Wise, our newsletter. I'm going to be potentially working with David to integrate this into the Node.pro website, which I will also share real quick. Let's bring that up. So we're going to be integrating that into this, and I'll be talking with David and seeing maybe doing some tweaks to the layout of the newsletter, and just get his input on maybe some data that we can add to it, or some information, some ways to improve it. We definitely want to have it as part of our offerings here on the Node.pro. He's working on these research links, so as we're going through the news in the first part of our segment, I'll start adding those into here so you can actually go to the articles that I'm referencing. And, because it's important that we don't just give out news like off of an X post. I like to go through and actually verify from multiple sources to ensure that the information that we're giving out is accurate and true. So we have that. Our live stream will actually be on this page here in the middle, and you'll be able to chat with everyone from all of our different socials all in one chat. So actually, to be honest, at when we get to that point, I would highly encourage everyone to watch here on our website, just because you can chat with everybody on all the different X accounts, YouTube accounts, Arena, all of them. So, this will be a great place to watch from. And then, of course, recordings of our, interviews, links to DeFi University, all the lessons there. And again, all of this is free. We don't charge for any of this. The only thing that we charge for is the 2 1 hour calls, live calls that David does with his community that you can opt in for. At $97 a month, great bargain. And our newsletter, it's $19.95 a month, Monday through Friday. I get up early, get it out with my brother Taylor, and get it out by 6 a.m. my time, Pacific. And it just gives you a quick rundown, a quick 5-10 minute read of what's going on in the markets, the news, some ranges, some trading ranges, things like that. Those are kind of some of the things I want David to take a look at and see what he thinks about them. But we definitely want to keep improving these products. But those are the only two things we charge for. All of everything else that we do is 100% free. So it's just something you can opt into to, for added value, or to, help support the channel.
Yeah,
So
I like value for value, So if you find value in what we do, well then here, Mike, let me just give you a rundown of what I plan to spend my Saturday tomorrow doing,
okay,
because I'm gonna be finishing all the web development for the node tomorrow.
all
So
right,
I'm just looking at my notes here. This is what I've got for tomorrow, man. So on the left-hand panel there, if you go back to that home page on the node.pro, that
yeah,
left-hand panel, that's going to be the research sources. So I'm finishing this admin dashboard. So Mike, you'll be able to log in to the admin dashboard and then post all of the sources that we're going to talk about live during our calls right there on that left-hand panel. That center panel, that's going to be the live video feed. And I think I'm probably just going to end up pulling from X, although X's API, man, is kind of a pain in the butt to work with. But I'm going to end up pulling from X, I think. And then on the right hand panel, that's the unified chat. So I don't know. I got to talk to Colin about this. I don't know if arena.social, if I can actually pull the chat or not from Arena, but from everywhere else, I should be able to get it into that terminal there. So it's a unified chat. And then the admin dashboard, and then all of that learning content. So when you click on that Learn tab, when you go to the Learning Center there, there we go. So that is right now, the way I've got it set up is just that the high school and university are paid, but I think I'm going to change that. And I'm going to make it all free. And then it'll just be, like if you find value, then you can hit the zap button and zap some sats. And then the newsletter, that newsletter integration. And I've got a couple of ideas for that. But yeah, man, just trying to give people as many opportunities to build a skill set as possible, whether it's, going through the research on your own, or, going through all the educational content, or listening to us talk markets every day, or whatever it is. If you find value in it, then, people want to be able to express their love. And a lot of people do that by sending some Satoshis. So all good.
No, and I'll be honest. There's a lot of people out there that charge thousands, if not tens of thousands of dollars for similar products. To teach people DeFi. To educate them on how to read charts and all those sorts of things. So yeah, again, we prefer to have it to where it's optional. If you want to tip 50 cents, if you want to tip $50, it's up to you. We're not going to put a price tag on it. So anyway, let's go ahead and jump into, actually, you know what? Let me show you the newsletter, and we'll start with the news there. So let's see. Oh, here, let me share this tab. So this is how the newsletter pulls up. And we start out with crypto markets and just kind of give an overview of what's going on, TradFi markets. But let's scroll down here. We got a couple of different trading ranges, buy sell ranges if they're trending bearish or bullish, positioning notes. And I want to go down to some of these news articles. This wrapped ETH USDC pool has been ranging nicely. So we actually had the range up here, and you can see where it was ranging. I used to have these blue lines up here, and it ranged for like a month and a half, 2 months. And then it dropped down to here, and it's been trending for about a month now, I believe. So been doing really well with that wrapped ETH USDC pool. That thing has been printing money for me. But here is some of the news. So TradFi and crypto, another partnership, the New York Stock Exchange parent Intercontinental Exchange, and we talked about this yesterday, has invested in the crypto exchange OKX at a $25 billion valuation. I'm just going to breeze through these really quick. Morgan Stanley provides $500 million loan facility to Core Scientific with option to extend to $1 billion. So, this is, I believe this is for Bitcoin mining.
Core Scientific. Not familiar with that one. Let me find out. What is Core Scientific?
And I'll keep cruising along until you find that. Introducing Exchange from Xstocks, the first unified execution layer for tokenized equities. Trade 70 plus tokenized stocks on chain across Ethereum and Solana, with pricing anchored to real world markets and atomic settlement. TradFi liquidity, DeFi infrastructure, always on.
So Core Scientific is a Bitcoin miner, but they also do hosting and co-location services. Looks like they do some high performance computing and AI services. Publicly traded under the ticker symbol CORZ.
So basically, like data. They have servers.
Yeah, and since for the last 24 months, the stock is up and to the right, plus 500% in the last 24 months.
Holy shit!
Yeah, doing pretty well.
Yeah, no, and it's smart that they're diversifying like that, not just going all in on Bitcoin mining. They can kind of shore up and mitigate those market swings with AI and all those other services that they're providing. So yeah, no, that's very smart of them.
Now, Mike, if you pause here for a second on the X stocks stuff.
Yeah.
So in the school community, the DeFi University School, I put together a ton of research on tokenized equities.
Mhm.
Really, really important. The school community is free. It's totally free. Like, go through that research because these tokenized equities are not created equal. So the way that yeah, they're all different. And you need to know that before you go in and think, oh, I can buy tokenized Tesla and it's the same as holding Tesla in my brokerage account. It's not. It's not. So,
Well, so,
um,
my understanding is some of them, like if you're actually holding the stock, you get paid dividends. But if you're not actually holding the stock, then potentially the person that you bought the stocks from is getting those dividends.
or you're not getting the dividend at all, and no one's getting the
That's what
dividend.
I mean. Is that
Yeah.
they're actually holding the stock, and you have an IOU basically, like we talk about, with a lot of other assets on centralized exchanges. You don't actually hold Bitcoin on a lot of centralized exchanges. You just have an IOU for a dollar amount for however much that you hold in your account.
Basically, yeah. So I'm looking here I'm looking in my school community for some information about these tokenized equities, because I put together a bunch of research on them last year, like in the fall of last year. So I'm just looking through. I think, Mike, what I'll do here is I'll put together some more research because I logged into my Coinbase account for the first time in a while yesterday, and I
Mhm.
saw that they've made some really big changes. That all
Yeah.
of a sudden, I can buy and sell equities on there. So that's pretty darn cool, man. I need to redo that research for
Oh,
everyone.
and that's why we try to focus so much on just a couple of the best protocols with the deepest liquidity and non-custodial and just the ones that we actually use, because these things change so much. I mean, this is evolving so fast that you just can't keep up with it all. So you're going to find that the platforms we talk about, like Pendle and Aave and Morpho and Aerodrome and Coinbase, and just there's going to be certain ones that we're going to talk about more. It's not because we're sponsored by them or anything like that. It's just there's only so many that you can keep up with, and then build websites and do live shows, and there's only so many hours in the day. So
Yeah. So this guy Eric, he's the Bloomberg ETF guru, right?
yeah.
Yeah.
So Eric Balchunas, Solana is down 57% since in price since the spot ETFs launched in July. That's about as unlucky timing as you'll ever see in an ETF. Yet they managed to not only accumulate 1.5 billion in flows, but not really give up any of it. Further, 50% of the assets are from 13F filers, serious investor base. I don't know what a 13F filer is. Both really
It,
good. Oh,
it's a business with greater than $100 million in assets under management. They're required to file those 13 Fs, which basically just say like, "Hey, this is what we're holding."
okay. So like quarterly or something like that, they have to.
I think so. I think so. Yeah.
No, and that's huge. I mean, that's huge for Solana. I mean, these markets have been shit as far as price, but to see that the inflows are that strong to where they're not just holding, they're actually increasing. The inflows. So that, yeah, very
Well,
bullish.
so here, let's pause there for a second on that, on the inflows, because a lot of these, if not all of these companies, Mike, if you scroll up just a little bit here on this, I want to be able to see that chart. So what Valkunas is saying is totally true. That these Solana ETF and Solana ETFs, I'm sure there are more than one of them, have seen inflows and really haven't seen outflows. I was looking at that just the other day with everyone in school. I thought it was so interesting that all of the other ETFs had seen some outflows, but not really the Solana ETF. Basically, zero outflows. And I think the reason for that is a lot of those treasuries. There were corporate treasuries that purchased Sol. Those guys bought Sol like $100 or $200 higher. Um, it's just like, like they're sitting on massive losses, and these treasuries don't want to unwind their positions. I haven't seen any news about treasury forced selling. They might be forced sellers if Solana's down at $30 though.
Yeah.
Down 90%. That is, if those guys bought, I think a lot of those treasuries, were basically like filled with SOL above $200. You
Oh shit.
know,
Yeah.
so yeah, they're not selling. None of them are selling, but I'm not convinced that the guys who bought that SOL for their
Yeah.
treasuries, I'm not convinced that they knew what the hell they were buying, because like what are the cash flows for Solana? Like what is the trajectory for the token? Like why would you want to hold the token? It's very inflationary. Um,
That is a very good point, and one that we keep kind of pounding the table about, as far as you can have a very good project with a lot going on. And, Solana has a lot going on. It's being integrated into Base and Aerodrome, and just like all of these different things. But the tokenomics, what is the benefit to buying and holding the token? It's the same thing with the XRP ETFs. Why the hell would you buy an XRP ETF? Other than hype, what is driving the token price? It's not needed to move value on the XRPL. There's RLUSD. So, understanding and being able to delineate between a really good product and a really good blockchain that's able to facilitate the movement of value or whatever pain point it's addressing, and more deeply understanding the relationship with the tokenomics, and if it's even worth buying and holding the token. That is so pivotally important to understand when
I
you're
think that,
investing in these.
yeah, bro. I think XRP is like the shittiest of the shitters, like when it comes to
Well,
shit coins.
it's the most talked about, the most hype, one of the largest market caps. So it's an easy one to pick on because
But honestly,
everybody's heard of it.
oh yeah, for sure. And it's out there everywhere. But
Yeah,
honestly, Mike, I'm not convinced that Solana is much better. At least on Solana, there's a big community of people building on it. That's the big difference. There's a
yes,
lot of people building on Solana. But I see in the chat, Snowsies is talking about what was it? Sol fees are high. Sol fees are as high as ETH. Well, okay, but here's the thing: where do those fees go? I know that staking yield on Sol is like 7%. You know what the inflation rate on Solana is? Like 7%. So
it's a net zero.
yeah, so net, it's a wash.
Yeah,
And okay, great. So there's a bunch of fees, but for what? If you're a Sol holder, you've got to stake the thing just to break even. Where are those fees actually going? And the projects that are actually being built on Solana, many of them are very good, but they don't have the DeFi TVL that Ethereum has, and they also don't have the track record that Ethereum has. And I saw Solana posting something just yesterday. They were talking about 24 months without going down, like as if that's a good thing. I mean, look, I guess it is, because I remember the last time Solana went down, it was horrible. Imagine you've got money and
with
the
the
chain.
with the FTX collapse. I mean, I remember because I bought not a ton of it, but I
No, 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 no. It was 2024. 2024. It was down for like a solid 4 hours in 2024.
oh, no, I meant price.
Oh, yeah. No, I'm talking about when it was actually down. Like
Oh, gotcha.
the chain was offline.
Yeah,
Yeah. So I don't know. I don't own any Sol. I will start to buy some Sol if it gets down below $30 though.
yeah. No, definitely. That's when I bought it in the FTX collapse, and then I sold just above 100, I think it was. So made a nice little profit, but like I said, just a couple of $100, nothing crazy. Um,
For sure.
the other thing about these flows is if we adjust for the size of Solana versus Bitcoin market cap, it's the equivalent of 54 billion in net new flows, which is about double where Bitcoin was at the same point. And Bitcoin was up a ton at the time versus down 57%. basically he's just saying that it's impressive that they're that they have these inflows despite the market downturn. So that's
I mean,
basically
look, yeah. So Mike, Eric, that guy Eric, he knows what he's talking about. But I think that comparison that he just made right there, not the best. I don't really agree with that type of a comparison because
I don't like comparisons either because it's you're kind of you're not comparing two like things.
yeah, exactly. And also the dollar figures. Like there's a big difference when you take a look at the Solana inflows, if you're talking about tens of millions of dollars versus on the Bitcoin ETFs or even the ETH ETFs, billions or tens of billions of dollars. Like big difference there. So it's one thing to just compare percentage amounts and make a point about the inflows to the Solana ETF being positive and not seeing any outflows. That's great. But I don't think that you can really make a valid comparison between the Solana ETF and the Bitcoin ETF. I don't think that you can do that. But hey, look, Eric, he definitely knows what he's talking about there. So I'll give him the benefit of the doubt.
Gotcha. So yeah, am I over on the arena? Says David, your research on XRP is beyond whack.
Oh,
So,
oh,
so
yeah. Who's saying that? I love that. Who said that?
am I over on the arena?
Oh,
So am I? I
yeah.
can promise you that I am spot on. Like David is up to speed on XRP, but I promise you, I am spot on with anything I say about XRP. I was in the top 3% of holders all through the last bear market. I had over 40,000 XRP. I did deep research, off the Ripple website. I went through their white paper. I went through all of it. I kept up on all the news on the court case. You name it. The RLUSD when they launched that and its role in the on the XRPL, how the majority of it is on the ETH mainnet, not even on the XRPL, so it doesn't even utilize XRP. I can go on and on. I promise you. This isn't FUD. You need to get out of that emotional headspace that that because you don't like what we're saying doesn't mean it's FUD. It's just facts that don't support your thesis.
Yeah, but Mike, the partnerships and the Fed and the Swift and the
Exactly. And how many times
$10,000 a coin.
Yeah, like
Bullshit.
it's gonna replace Swift.
Yeah.
They're not
Yeah.
even trying to replace Swift anymore. Ripple is trying to become a bank. So it's this constant shifting narrative of how they're gonna, XRP is gonna go to some ridiculous amount of money because of what Ripple's doing, when there's absolutely no correlation between the XRP token and the success of Ripple. There was a whole court case on it. It's not a stock. You have no you hold no interest in the company Ripple by holding XRP. So
Yeah. Yeah.
well,
And that ruling, Mike, from that
yeah,
judge, dude, she gave she gave Ripple Labs a huge out. That was a huge win for Ripple Labs
yes, it
because
was.
it really looks like they were issuing an unlicensed security, an unregistered security. That's basically what they were doing, it looks like. And, she basically made it legal for Ripple to dump XRP tokens on retail,
Yeah,
but illegal for Ripple to dump XRP tokens on institutions.
yes.
That's what her ruling did. And it's
No,
like,
it was a huge win for Ripple, and I remember I celebrated it because I like I said I had a bunch of XRP, and I thought because I had been told forever, and I hadn't done my research. I had been told forever that when that lawsuit was won, that XRP was going to freaking go to the moon, and it didn't budge at all. And that's when I started doing my research, and that's when and that is what was my lesson to really learn about these projects and do deep research into my holdings instead of just believing what I'm being told on social media. So it's
yeah, man. So whoever in Arena was saying that we're spreading FUD, dude, I love it. Like, come with some facts.
no,
Let's see some facts.
I challenge anybody out there
Yeah.
to if you want to have a logical, unemotional, not throwing insults debate about anything that we say on this show, we welcome you. because
Please.
if you can show us how we're wrong, we'll admit it. I'll be the first.
That's who I want to talk to.
Yeah.
I want to talk to the people who don't agree. That's
One,
who I want to talk to.
yes. No, 100%. I want people to challenge if I'm bullish on something. That's why, I love talking with David. He beats me up about Arrow all the time. I want him to do that because it
Yeah.
knocks me out of, my little echo chamber of, confirmation bias, finding
Right.
things that align with the way that I want to think. He'll point out things. I'm like, oh shit, you know what? I think you're right. I need to go research that. And it makes me more knowledgeable about the pros and cons of me holding some of these assets, and it helps me to fully understand what I hold. Because if you're just listening to the same people saying the same stupid shit of it's going to the moon, it's going to the moon, it's going to the moon, you're probably going to end up being the last one holding the bag, or when the music stops and everybody else has a chair, you're going to be sitting there and all your liquidity is going to be gone because everybody else cashed out.
You see what Snozy said in the chat, man? Like, I'm in a cult server on Discord for XRP. Just hop in there sometimes and troll them. That could actually be kind of fun, man. I kind of get trolled by one of my community members. He's got my cell phone number. So every now and then he sends me text messages, and it's all because he's an XRP dude. So it's always going to be like some crazy nonsense. So like I get trolled by one of my own dudes, man. It's like, all right, yeah.
No, and it's fine. If you want to hold XRP, no skin off my teeth. I'm just going to tell you the facts. What you do with them is up to you. I mean, I don't care if you're all in on XRP. None of my fucking business. But it doesn't mean that I'm not going to tell you, actual facts about it. I'm going to tell you the good and the bad about all these projects, even ones that, like Aerodrome. There's things I don't like about Aerodrome. I would love, for one, my locks. I'm hoping with the new platform that there'll be a mechanism in place to where I can stay max lock and just harvest the yield that I get at the end of each epoch on Wednesdays. Because I would love to just have that harvested into
can't you do that? So maybe you can't auto harvest it into stables, but the Arrow tokens, if you lock for the 4 years, and then I think you have to then what's it called? If I hop on over to Aerodrome,
there's autopilot where and right now it's a separate site. It's supposed to be part of the new platform though, but with autopilot you can deposit it there and you can harvest yield. And I don't know. I haven't used it yet. I don't know if it will auto swap it over into Bitcoin or stable coins or whatever. But that's what I would like to see, because I would love to automate that to where it just auto harvests in Bitcoin or USDC or something like that, to where I have dry powder. Whenever I see a project or I want to do an investment, that I just have that sitting there.
Right. So that's right, the VE Arrow Maxi. So if you're
that auto compounds though, that just auto compounds back into your position.
Right. So it rebases, but when you withdraw, okay, got it. So what you're looking for is you want that yield to not just auto compound. You want that yield like swapped into USDC so that you could do something else with it.
Yes.
Got it.
That's what I'm hoping to get with my locks, because if Arrow's gone to $2.20 before, if it goes say it goes to $5 somewhere in the future, who knows when, then I mean easily I'd be making an extra couple just off my Arrow locks, a couple $1,000 a month, that if it I already have my other incomes and I live very comfortably, but if I had that extra couple grand a month that went into USDC, and whenever the markets took a big dip or something like that, I had a couple of grand to throw into Bitcoin or Ethereum or some new project, that'd be awesome. I just never have to worry about coming up with dry powder. Just have a basically an account that is my dry powder account.
So Mike, what we should do? We should spend some time, maybe we could even do it on today's episode at some point in the educational section. Through some Aerodrome, like real cool financial engineering, because there's a lot that you can do with the yield on those locks. You can borrow against that stuff. There's some interesting stuff you can do with Arrow.
Yeah, let's dive into that. But Not Scoot Boy says autopilot swaps rewards into USDC. I collect USDC and buy Arrow on the low. Fucking beautiful. I appreciate you bringing it. See, I mean, like I said, I mean, I'm a huge aerodrome bull. Doesn't mean I know everything. But yeah, autopilot is supposed to be integrated into the new platform that's launching like next month or the
Oh,
month.
got it. Because I was looking just now for autopilot,
Well,
and couldn't find it.
It's autopilot.xyz, I believe, is where it is currently. It's its own website.
Okay, so Aerodrome, the guys, yeah, because autopilot.xyz is bringing me to domain for sale.
Okay, hold on.
Yeah. And so I was taking a look also in the chat. One of the guys in the chat mentioned Hydrex, and that is HYDREX.phi. I'm just taking a look at that one. Um, these are some interesting looking average APRs, man.
Well,
100%.
Screen. I know we're getting away from the news a little bit, but this is interesting.
Well, yeah. Why don't we do this after the news?
All right,
because I could go down this rabbit hole for the rest of the call.
Oh yeah, no, that's the problem. That's why we had to make a 2-hour show. Is me and David we're bad at getting down rabbit holes.
Yeah, man. Well, I definitely want to talk about this though.
All right. Let's blaze through the headlines real quick. We got about 30 minutes for the news left. So it looks like Bitcoin drops towards 70,000 ahead of the U.S. jobs data and the oil surges on Iran war summary. Bitcoin extended declines towards 70,000 after highs near 73K, pressured by defensive positioning from Iran conflict and escalation, oil spikes, an upcoming NFP jobs report. Crypto showed 24/7 resilience versus equities. Options expiry 2.6 billion notional could trigger liquidations or relief rally near 69K max pain. ETH majors dipped 1 to 3%. So what are you seeing as far as that goes, David?
Yeah. So number one, Mike, are you because you're sharing the block? You see that?
Yeah. It's
okay.
I don't usually show because it's basically just my notes. It's boring.
Gotcha. Yeah. So here, let me. So what I see here is number one, private credit starting to blow up. So Blue Owl and Blackstone, they tried to avoid these fire sales, and BlackRock just did start the fire sale. So I think that we're going to start to see equities roll over here a little bit. We really haven't seen. I'm just looking over here at my other screen. We haven't really seen much weakness out of equities until today. We're starting to get some volatility creeping back in today. In fact, why don't I just go ahead and share that chart real quick, just so that we can see this. I want to make sure that I share it from my tab here, because that's the only way that StreamYard will work. If I share my screen, we're going to take a look here at just a couple of items on the charts. Let's check this out together. Okay, so I don't want to start off here with ETH. Instead, I want to start off here with the VIX. So here's volatility. So remember, volatility is a mean reverting asset class. So that simply means that whenever you see volatility pump, you should expect that it will revert back down to its mean. So let me go ahead and grab an arrow. So basically, for the entirety of this year, volatility has been increasing. So we haven't really seen much real downside out of the S&P or the NASDAQ yet, but we're just now starting to see vol creep up above, really, and stay above 20. Like, that's the important level, 20. And so now that we're well above 20, sitting at 25, and there have been a couple of sessions recently where volatility has really spiked higher, likely as a result of the conflict in the Middle East. Mm-hmm. My opinion of this is that there's more upside left for volatility. And let me tell you a little bit about why. We need to check in on bond market volatility. So this is bond market vol. This is referred to as the MOVE index. This is simply a measure of bond market vol. And notice we've seen this increasing bond market volatility this year. Why is that so important? Well, because if you invert the scale and then throw the S&P over top of this, what you'll see is that these have been tracking each other. You see that correlation? So S&P in blue and bond market vol inverse in the candlestick chart.
Mhm.
When we see the bond market move, the bond market vol move higher, that should mean that the S&P moves lower. That's the expectation. And so if I see a couple of different indicators telling me the same thing all at once, if I see, okay, bond market vol is increasing at the
Mm.
same time that volatility is breaking out, and I see the stock market starting to roll over. This
Mm.
looks like distribution at a market top. And this is occurring at the same time of year that last year we got that first leg down into the April tariff tantrum lows. So I'm thinking that, we probably see more volatility in the immediate term, especially from equities. And my expectation is that that will feed through into digital assets. And, we're seeing Bitcoin off today 4% and ETH off today by, 5.4% and Sol 5.4%. And this is just a bear flag. This pattern here that Solana's putting in, this is just a bear flag. You take a look at ETH, this is a bear flag. You take a look at Bitcoin, not quite as well defined of a flag there, but Bitcoin rejected without breaking above 74 and a half. That
Mhm.
was the big
That,
level of
that
resistance.
key level, yeah.
Yeah, big key level, a pivotal point. It wasn't able to get above.
Mhm.
So, I take a look at crude oil at $91 today, WTI crude. And so, back in 2022, we got at the beginning of that Ukraine war,
Mhm.
there was a big, big pump out of crude. And so, could we see crude at $100 in the near term? Potentially.
Mhm.
Depends on how quickly the United States and Israel are able to decimate the Iranians' capability of, harassing ships in the Strait of Hormuz. So it could probably just be another couple of days or maybe a few weeks until, the Iranian regime is just completely gone.
Mhm.
And so that would mean that the Strait of Hormuz could, be free finally and
Mhm.
once and for all. So, I'm more of a seller of oil here, but I think it's a little bit too soon to be selling it. I was thinking about selling it here at 75, 76 just
Yeah.
yesterday, and I never opened the trade. And I'm happy that I didn't. I would have been stopped out, you know. So this is a big, big move out of crude, and the next level of resistance comes in right here at $95. Get above $95, and then we're going to head above 100 and maybe get some type of blow off top like we got back in 2022. So I'm definitely watching crude. Crude is definitely on my radar, and this is the way that I would play it. I would trade it over here on Ostium. So, I'm just sharing my Ostium tab right now. And the one thing to watch is the funding rate. And funding is cheap. So funding is 2% APY over here on Ostium to be short. So that's the direction that I would take here. So just wanted to share a potential trade idea there.
Okay.
Getting short crude maybe above $100. If you get an opportunity to get short crude at like 110, oh man, I would take it. And if it continues to push up to like maybe you nibble on the short side at 110, if it gets up there, you might even start nibbling on the short side now. Because, look, no one has a crystal ball. No one.
Couldn't you do like a limit order and just like have a short limit order in at like around 100 or something like that?
Sure, sure, you absolutely could. You could just leave a
In case,
rough order
in
in.
case that's what it did, spikes up. If that freaking if that order fills, then and it starts to dip, then it might be a good catch.
Yeah, I would just trade it very, very small and
Oh
don't
yeah,
use
no
leverage.
leverage. Yeah, no leverage.
Yeah, no leverage, very, very small. And if you're going to leave a resting order in, just close it overnight. So
Mm.
I would leave it open during the day while you're in front of your screens and can take
With
action on it.
and have a stop loss, set.
Oh, of course, yeah, that's mandatory.
Yeah.
But crude oil, interesting day for crude. Now here's ETH. The thing for me about ETH is this is just a bear flag forming, and support comes in at 1600. But here's the thing, Mike. If we take a look at BTC and we zoom out to a weekly here, let's just zoom out to a weekly chart. And now that we're starting to see some downside out of the stock market, and we also see this big candle wick forming on the weekly chart here on BTC, I think that if we throw down that 200-week moving average, I think that this price action right here, Mike, is the same as this price action right here. And notice we even got the wick on that candle up last cycle around this same point in the cycle. So, this is Jan, Feb, March from last bear cycle, and this is our Jan, Feb, March from this bear cycle. But the pattern here, the horizontal, that's what I'm watching. I'm watching the technicals, the structure. So that horizontal, I think, is this horizontal right here.
Okay.
So, I'm looking at the 200-week moving average as the next important level of support. And when we started to break down after putting in that big wick last cycle at this same point in the structure, then there was a sharp move lower and a break of the 200-week. So that's what I expect to happen over the next 2 weeks. I expect the 200-week to break, and it wouldn't surprise me if Bitcoin's down at 55K by the end of March, or at least by the beginning of April. So you typically see a rally in March in the midterm year during a Bitcoin bear market. That's what has happened in every previous cycle. So we got a rally so far this early March, and Bitcoin is getting rejected at resistance without breaking out. So my expectation is that by the beginning of April, Bitcoin will have broken its 200-week moving average. So I'm short. And yeah, man, if we run down the list of alts, these alts, I really think that we might have like Altmageddon this year, where every single altcoin just gets sold into oblivion. Even from these relatively low prices, I still think that most, if not all, altcoins are massively overvalued. So like SUI, my expectation for SUI is that it moves from 90 cents, 89 cents, where it's trading now, to below 36 cents this year. XRP, I expect XRP to move from the $1.34 it's currently trading at to maybe 29 or 30 cents this year.
Basically back to where it was at during the last bear market.
Exactly right. And that's the important thing. All we've got to do is look at last bear. That's where I think all of these altcoins are going, every single one. We take a look at maybe with the exception of like a handful, like literally a handful.
Like Canton.
I mean, who knows? Like this, so that like this ARB token, man, like I don't even know what the point of this existing is. Like if we zoom into this is the weekly chart. It's just it was trying to put in a bit of a flag, but that's the all-time low for ARB. So this is like a layer 2 governance token. Why does this even exist? Arbitrum is a great chain. Why does it need a token?
Yeah,
I don't think it does. And I think that this token probably goes to like 2 cents. I would not be surprised.
That's what we keep harping on is, and it's weird because I don't hear a whole lot of other people saying it. That they aren't calling out that just because there's a good tech, just because they have people building on the platform and it's fast and secure and there's no downtime and they have these huge partnerships and people are actually building and utilizing it and they're generating fees. A lot of people aren't talking about, okay, well, how does that translate over to the people holding the token? And if it doesn't, you need to start asking yourself some very serious questions of why are you in that project? Why are you buying that token? Because, it's bullish for that project that all that stuff's going on. But if you're not sharing in that success by buying the token, why the hell are you buying the token?
It's almost like, you hold a meme of the protocol.
Yeah. You have your favorite team's jersey or the baseball card of your favorite baseball player. That's the equivalent. And you hope that somebody wants that more than you do and is willing to pay you more for it than you paid for it. That's really what it comes down to. There's a
And
lot.
just think about that logic for a second, though. Like, if you're holding a meme of a protocol because you think you can turn around and sell it tomorrow for more than what you bought it for to just someone else, well, that's Ponzi-nomics. That's not real economic value. Like,
Well,
that's nonsense.
it's the whole basis of sports cards and Pokemon cards and collectibles and stuff like that. For the most part, is if somebody is willing to pay you more than you paid for it. That's it.
Yeah, yeah. And I mean, we talk about Aave, being one of the best money markets
Mhm.
in DeFi, and I think it is. But the Aave token, that's a different thing. That's a different story entirely. So if we take a look here, where you've got to ask yourself now, when you look at charts of alts, where were the bear market lows last cycle, last
Yeah.
bear market? That's where all of these alts are headed, I think. So $50 for Aave, it's currently trading at 110. So, down to 50.
60, like 50, 60%, haircut.
Exactly.
Yeah.
Yeah. I think that they all are going to move lower by at least 50%. So, here's BNB, really, really pretty bull. This is a bear flag right here. This
Yeah.
is a textbook bear flag. And sitting support, this trend line support that I've drawn in, then you've got that 200-week moving average below. Here's the thing. If Bitcoin breaks its 200-week moving average by the first week of April, there is no way that BNB is going to hold its 200-week moving average. I would think that BNB would make a straight shot down to $200. So that's the bear market low from last cycle, down below $200. So it's really, really simple. Just, paint the bear market lows from last cycle on your chart and then wait. If you want to buy something,
Or put a buy
paint.
order in, in
Yeah,
case it wicks down while you're sleeping. If you're bullish on that project, it's that might be a smart move because that October 10th, if you would have had a
oh
buy,
my goodness. I know.
you know what I'm saying? If I shit, I mean, I keep telling myself that I want to do that. Just put a couple $100 on a couple of these projects I'm bullish on, just on the off chance that they wick down. And if they do, and that fills, just freaking Christmas came early.
Yeah, man. I mean, anyone who got filled on some of those resting orders, much, much, much lower on October 10th,
Well, like
because there were,
Adam went down to like 1 cent or
I
something like that.
know,
You caught that wick. I mean, shit.
I
Not
know,
not
man.
not that I would hold that long term, but if if it filled at 1 cent, and even if it pumped up to 10 cents and you sold it, that's a 10x right there.
Yeah, man. Yeah. There were some people that got some amazing fills. There were
Yeah,
some amazing fills. So all I'm looking for here on this chart of arrow is I really wanted all the data. And this is not all the data. Maybe I could just grab the contract address from like Dex Screener and paste that in. So let me just show everyone what I'm going to do here. So here's Dex Screener, and all I'm looking for is the contract address on the base chain for Arrow, the Aerodrome token. So I'm just going to go ahead and click through to this, and I want to grab that contract address. And let's see, where the hell did they keep it again? Contract address for the token. Where is it? I know that it's, there it is on the right-hand panel. So you see, there's the Arrow token. I want to
yeah.
copy that contract address. And then I want to hop back over here to TradingView and pop that into the search bar. Perfect. Okay, so this is going to bring spot crypto, but I don't think this is all the data for Arrow. Is it? No, it's not. We need to go back to August of 2023. So now this is the Uniswap pool. I don't think this will be all the data either. I don't think so. This is going back to Feb 24. Nope. I'm going to paste in that contract address. Okay, so these are just different pools on Uniswap. What about like an actual Aerodrome pool? So spot, Aerodrome, Slipstream, base. Let's see. Does this pool have all the data? Oh, June 24. No, damn,
No, no.
it doesn't. It doesn't. Getting closer though. I know that there's a pool here that has all the data going back to August of 2023.
If it's a pool, it's probably going to be an Arrow USDC pool.
I would think so. I would think so, right?
Yeah.
It's going to be one of those. And so, really, what I'm looking for is just like the original pool, the
Yeah.
OG pool, the one that got initiated back in the day.
The Genesis pool.
Exactly. That's what I was looking for because I want to be able to see all the rest of the data and I know what it looks like. I can draw it in. So it looks like this. And then we get the Coinbase announcement and that Coinbase announcement, and then boom, price goes like that.
Yeah.
So when Arrow launched, I think it launched at like $10, the Arrow token. And it was just a candle straight.
If it goes back to that, I'm set.
Oh, sure, man. Sure. Well, so this token, when it launched, it did nothing but go straight down because that's what it should do. That it's an inflationary reward token. It was used to bootstrap TVL. It succeeded wildly. And so what it should have done is go straight down. And that's exactly what it did until Coinbase announced their investment. And so Coinbase Ventures, I think it is, they announced their investment and then all of a sudden the token took off.
Yeah.
And, now we're sitting here above 27 cents, currently trading at 33 cents. And if I just zoom in on this daily of Arrow and we just check this out real quick. So number one, this is an upsloping flag. You can paint the flag on there. So this is a bear flag. If this pattern were to complete, you would see Arrow down here at 12 cents at least. And the thing for me and why I am short Arrow is because I'm not convinced that I'm just not convinced that those VE33 DEX mechanics actually result in token holder value. So, what I see here is that big pump, and I expect on the way back down a big dump. But here's the thing: those Arrow locks, and they pay a lot of yield. And so, if you can hedge away your directional risk on those locks, then you can essentially just arbitrage that yield. So if we take a look over here at Aerodrome and we take a look at like the VE Arrow Maxi lock paying 20%. If you've got 10,000 Arrow tokens, okay, and you've got those locked up for the next 3 years, 4 years, let's say, and you're earning 20%. Well, okay, 20% is great, but not if the value of the Arrow that you've got locked up is down 90%.
And you also got to keep in mind that that's paying out and compounding weekly.
Right, but even that doesn't matter if the underlying asset.
Yeah. I want to make sure that we paint a full picture.
Yeah, for sure. So but there's some interesting financial engineering you can do with this stuff though. So because this yield is so big.
Well, before we get too deep into that, because I definitely want to dive into that, but I want to give this one last news article.
Awesome.
So crypto legislation hits new impasse as banks reject White House compromise. Not sure why they fucking have any kind of fucking say in it, but talks on the Clarity Act and related Genius Act elements stalled again after banks rejected a White House-backed compromise on stablecoin yields and market structure rules. This raises serious doubts about the passage in 2026, despite Trump's prior push for pro-crypto reforms and criticism of bank lobbying. The impasse highlights ongoing TradFi crypto tensions over yield features and regulatory parity. So, as everyone knows, if you're paying attention, the banks do not want you to earn yield on your stablecoins. They want to corner that market. They've had that market for decades. They want to keep that. So that's basically we can go ahead and round out the news with that. But I just wanted to finish that before we got too deep into the Arrow thing. But go ahead and let's jump back into the Arrow talk.
Sure. I mean, look, I could talk about how much I love Arrow all day. All right,
we know you jest.
Oh, I know. Look, Arrow's not. Look, I think it's worthless. Okay, that's what I think.
Yeah,
But
I know your stance on it.
let's check this out though. What can you do with this 20% APR? So this yield is not worthless. You can do something with this,
Mhm.
but you've got to be able to hedge away that directional risk.
Mm.
So let's go ahead and take a look. Where can you hedge this directional risk? Well, there are a couple of options. Um, number one, you could take a look at using a perpstex. That would be definitely a possibility. But how can you do it and make it almost free? Or maybe not free, but how can you really lower the cost of putting on the hedge by using Arrow's own flight school bonuses? So I'm going to hop on over here to Dune because I think that, and Mike, you probably know better than I, where to get all of here. Let me just see. I want to make sure that I'm sharing the right thing. So over here on Dune, I'm going to look for, if I hit search, I'm going to look for that Aerodrome Flight School.
Here you
There
go.
it is.
Oh, you got
VE.
it. All right.
Yeah, so it's the I'm looking for, okay, so Epoch 132. I'm looking for the flight school thing.
Here, let
That's
me. I'll drop it in the chat. Hold on.
yeah, let's take a look at that.
I,
Because
I just dropped it in the private chat.
okay, got it. Awesome. Perfect. So let me stop that share and then let me just make sure that I share the right one here. So that way we can run through this together. Okay, awesome. So here's that VE Aero Rewards program. Here's that flight school. So basically, if you swap into some Aero and then lock it for max lock, and you swap into at least 2,500 Aero, then you're going to get, when you lock for the max time, which is 4 years, you're going to get 2,500 VE Aero. And you even get a boost now for Coinbase One members. That's pretty
So
cool.
Coinbase One, you get I believe it's a 1.3x multiplier, and if you deposit it in the VE Aero Maxi Relay immediately, when you lock it, then you get a 1.2x multiplier.
That's
One or the other. You can't get both.
That's pretty cool, man. So you know what I just did is I took a screenshot of that program there, and I'm just going to go ahead and save this as Arrow Image One. And the reason why I'm doing this is I want to get enough context together for Gemini Deep Research, and I'm going to hop on, or we don't even need to use Deep Research really. So I'm going to hop on over here to Gemini, right? And so the first thing I want to do is just upload that image that screenshot that I just took of the that flight school program. So I'm going to say read and understand this flight school program from the DeFi protocol. And then I want to grab the actual URL so that it can read a little bit about Aerodrome here. So I'm just going to copy that URL. And the reason why I'm doing this is I'm going to use Gemini to build an interesting piece of financial engineering using the flight school bonus plus the lock on Aerodrome in order to create an offsetting short position so that you can really isolate that 20% APY and actually have it be meaningful so that, if I'm right about Arrow and it goes to a couple of pennies this year, you don't get wrecked on that position. So if you're delta hedged, then what you're really doing is it's a basis trade. Like you're earning that basis, and that basis is that flight school relay bonus. So that yield over here, this is what I'm after. I want to isolate this yield, this 20% APR, and I want to do so without having directional risk. I don't want to be exposed to that Arrow token. So all I did just now is I took another screenshot. So I'm going to say this is Arrow Image 2, save that in downloads. Okay, and now I'm just going to hop back on over here to Gemini. And there we go. So it's got a little bit of context about that. Awesome. And now I want to upload that second image, Arrow Image 2. And now I'm going to say, please, Lear, please learn about the VE Arrow Maxi Relay on, and then let me just paste that in on aerodrome.finance. Just want to make sure that I called it the right thing. VE Aero Maxi Relay. Perfect. Awesome. So now I'm just going to hit go, and it's going to take a look at this image, learn a little bit about that specific relay. All I'm doing here is building context. So number one, Gemini needs to know about the flight school and what those bonuses look like. Number two, it needs to know about when you actually deposit that lock into that relay, the VE Aero Maxi Relay, what do you earn? What's the yield? So it's that 20%.
Did you let it know that it compounds weekly?
So what I told it is, learn everything about it.
Oh, okay.
So I would assume that it probably was able to pick that up. So we've got the first two pieces of information, but we're not done. We need now a place to hedge this shitcoin. So what we're going to do is we're going to hop on over here and let's just take a look and see if there are any markets on Morpho. We might be able to hedge it on Morpho. So here's the plan. I want to, and we also need to be able to exit that flight school bonus lock. So there's a couple of steps here. The idea is, number one, swap USDC for Arrow. Number two, take that Arrow, lock it. Number three, receive the lock and the flight school bonus lock. And those flight school bonus locks, they're deposited as a lock into your wallet, and like once a month. I think it's right after you lock up your minimum of 2,500 Arrow.
Then it's roughly like every 30 days the flight school ends, and and those pay out. Like I'm waiting on one right now.
Right, exactly. And so once you receive that lock, there are some places where you can exit those locks.
Yeah, you can. There's markets that you can go to and sell them at a discount.
Right. Do you know what those markets are? There are two of them that I've used.
Yeah. Let me pull it up.
Yeah. Can you find that for me, Mike? Because there are two markets where you can exit those locks. And so all I'm trying to do here is, if I start with 2,500 Arrow and then I get a bonus lock, I want to exit that bonus lock so that it's liquid. And then once I've got the lock exited and it's liquid and I'm just sitting in USDC, I want to deposit that USDC as, go ahead.
So eventually on the new platform, they're going to have one there. But currently in the chat, Not Scoot Boy says, isn't there one on OpenSea? I'm pretty sure that OpenSea is one of them. It's an NFT marketplace.
So let's see. I'm going to hop on in here to Gemini, and I'm just going to upload that image one. And with image one, I'm going to say, read this, and then tell me, and then learn about all of the secondary marketplaces.
Okay, the one I was thinking of was Vexy.
Oh yeah, what's it called again?
Vexy, VEXY, Vexy.fi.
Okay, great. Vexy, VEXI.fi. Is this the one that I used? I used another one. It was called Marketplace X or something. You said VEXI or VEXY?
VEXY, Victor Echo X-Ray Yankee.fi.
Gotcha. Okay, yes, this is the one, Mike. Perfect. Okay, awesome. So all we're doing is we're getting all the building blocks together to be able to build this out, and making sure that Gemini has all the context along the way, so that we can actually build it into a model, and then we can model the yield from a $2,500 Arrow lock, with that flight school bonus, which you then sell for USDC at a discount. Take that USDC, use it to create a hedge for that Arrow in the first place, and then you're essentially isolating that 20% APY. That's the goal. Yeah. So over here on Vexy,
or you can be an agent like me and just freaking hold all of it.
I mean, you could do that, but I like making money. Like I want to see if I can make some money with this. And my market bias is that Arrow is going to maybe 3 cents or something this year. So I think, down 90, 95% from the current prices for Arrow, I think that makes sense to me.
Well, that's why I wanted that auto harvesting, feature to where, all of my yield that I earn off my locks goes, straight into USDC, into my wallet. So it just sits there and builds. And then if the market does take a dump, if I want, I can buy a bunch more Arrow, or I could buy a bunch of Bitcoin, or whatever. So that kind of insulates me from that down that downturn as well.
No, it doesn't. Not at all, bro. It doesn't isolate you at all.
If it's in USDC, it's not exposed to the price drop.
Well, but the Arrow is though. So if
the Arrow is, of course.
Right. So if you've got $10,000 of Arrow, let's say.
And it goes down 90%, you're gonna have $1,000.
Right. And so if you, it's not like this APR for this maxi relay is going to go from 20% to 2,000% to make up for the decline in the value of the collateral.
No, but I mean, if you've been building USDC over the past couple of years in an account, and you've made 60% or something like that, it's going to hedge. It's not going to be freaking a perfect hedge, but it's going to be a hedge. If you're if you've been harvesting that over time, it's not going to be as dramatic as what you're talking about. But again, if say I was taking all of that in Bitcoin the whole time, back when Bitcoin was in the 30s. And I was, harvesting that, and then Bitcoin went to 120. That would be a nice hedge. Where if you're putting it in Bitcoin to where that's going up in value, and Aerodrome takes a dump, that's that's going to offset those losses.
So so check this out. Let me just share this tab. So if I've got 10K and I'm doing 20%, so I've got 10K at 20%, right? And then that 10K is actually in my favorite Arrow. I love the Arrow.
Yes.
It's so good.
It's very good, very nice.
And then the Arrow does the bad thing, and Arrow go down.
Bad Arrow.
Bad Arrow. Arrow go down 95%. Okay.
Why you gotta add 5%? We were talking 90%. Now you're talking 95%.
I mean, because man. Okay, let's go 90%. Okay, let me be a little generous here. Little generous, 90%. Okay, so now you've got the less Arrow. Okay, you've got less in dollars. So now that 10K is 1K.
Yeah.
And so if now you're doing 1K at 20%, your earnings on that Arrow lock just went from 10K doing 20%, which is
basically $2,000 a year to $200 a year.
Exactly. Yeah. Exactly. So now you're doing 200.
If a big if, you're still earning the same amount of Arrow potentially if you're still earning 20%, and if the market recovers, if you're bullish on Arrow, you're still earning the same amount of Arrow tokens, and when it goes back up,
you're correct. But see, what if you didn't have to suffer this drawdown? So Mike, check this out though. What if you could just hedge this part? And then if I'm right and Arrow goes down 90% from where it's currently at this year, then your hedge completely eliminates that directional risk.
No, absolutely. I see where you're going. I'm painting the full picture for people that, whatever your mindset is, that, they see the results of, all these different scenarios. So no, definitely keep going with what you're doing.
Yeah.
It's the smartest move. I want people to understand that why are we doing this, maneuver that you're talking about, the strategy. So, they need to have the full picture. That's all I'm getting at.
Right. So check this out though. You can use that lock to create your hedge.
Mm-hmm.
That's what I'm trying to do. So
Yeah.
if you've got, 10K arrow, and then the lock is, so if I were to lock up 2,500 arrow right now for 4 years,
Yeah.
what would that flight school bonus be?
So I just did one, and I did the math, and it's with the multiplier, you're looking at about 600 and something tokens is what you'd end up getting for 2,500.
Okay, got it. So let's just run that real quick. So let's say,
It's roughly 2,500 tokens is roughly $1,000 at current valuation.
got it.
So
So
so basically, you're getting about $200 of free arrow for your $1,000 that you put in.
okay, so we got 2,500 tokens at 33 cents. That is $850.
Yeah, yeah.
And then you said that the lock, the bonus lock is
Yeah.
how many tokens is it,
It
do you
was
think?
roughly like 600. I'm giving
Got it.
very swag numbers.
Okay, so all good, all good. So you got the flight school bonus, and that bonus, let's just call it 700 arrow. So now you've got 700 arrow, and that 700 arrow right there, let's go ahead and 700 times 0.333. So that's 230 dollars. So you got $230, 700 arrow, and you need to use this 230 to hedge this 2,500 arrow lock. So you're using $230 to hedge $850. So
Gotcha.
that is the idea. Now, where can you do that? And
So you
also,
put it in a meme coin on 10x leverage.
no, don't
No?
do that. Don't
Okay,
do that. No, no,
sorry.
no. So what you got to think about too is, over here on Vexy, when those locks start hitting wallets, you're going to see a lot of people wanting to get out of them. So these listings here, just sort by discount, and the discounts aren't that bad right now, like at all. These
Yeah.
discounts are great. So this is important to know, because let's just assume that if you want to hedge, then you're going to have to, sell your lock at a discount, that flight school bonus lock.
Yeah.
Let's just assume that you're going to have to sell it at a 10% discount. So if we come back over here to the math, to the blackboard,
You're
that
losing
means
$25.
exactly. So that is, instead of 230, that's actually something more like 200.
Yeah, just
So
roughly.
got it. So once you got the 200 USDC, we need to use that to hedge the 2,500 VE Arrow lock, that 800.
$850. Yeah.
Exactly. So where can we do that? That's the last piece of this. So there's a couple of places that you could do something like that.
Put it on
Number one,
black.
well, I mean, probably
Okay.
not a good idea, you
Yeah.
know. But what you could do is, as long as funding as long as funding is positive, let's just check in the Arrow market. So funding is deeply negative. So you wouldn't be able to use perps on GMX to hedge that Arrow position, because
Okay.
funding is just too volatile over here. If funding is, if you're short and funding is negative, you're paying funding to keep the position open. You can't
Got
do
it.
that.
So you're
So,
basically hemorrhaging profits.
well, so you're paying a massive funding rate just to be able to keep that position open.
Yeah. So that's going to
And
contribute to you hemorrhaging profits.
yeah, well, I mean, it's actually, over time, it would lead to that short position getting forced closed,
Yeah.
even if the market moves, sideways or slightly lower. Like
Mhm.
that's a lot of funding to pay. Can't
Yeah.
can't do that. So instead, what I'm thinking is, where can I borrow the Arrow token? Or maybe take a look at a different perp stacks where funding might actually be positive.
Morpho would be a good place to look.
Okay, great. So let's just check out Morpho, and let's just see if on Morpho we can supply USDC and borrow Arrow. So I'm over here and I want to take a look at markets. And from markets, I want to search for Arrow, just searching for Arrow. Okay, so that's the opposite market. So this would be, supplying Arrow as collateral, borrowing USDC. So that's the opposite direction. I want to supply USDC and borrow Arrow. So let's just see here. If I click explore, maybe if I just connect a burner wallet, it might want some wallet connections. Sometimes these dApps want you to connect before you can see everything.
Hate
Um,
that.
I know. Aerodrome does that. So curators, I'm not really looking for curators. What I'm looking for is I want to be able to borrow. That's what I want to do. I want to be able to borrow. I want to be able to borrow against USDC. I want to be able to borrow Arrow against USDC. And it looks like I may not be able to do that. We could take a look at the DeFi Llama aggregator here over on the old menu. Let's see, the borrow aggregator. Let's just go to simple. And the borrow token is Arrow. And the supply token is USDC. There we go. And couldn't find any pools, it says. So
That sucks.
include incentives. So what was that one that?
Looks like they're saying in the chat Moonwell.
Yes, Moonwell. Thank you. That was what I was thinking next.
I guess it's 4.3% APR currently.
That's amazingly good. That's really, really good. So yeah, let's hop on over to Moonwell, and then let's just see what the LTVs look like, because it might not be you might not be able to hedge the entire 2,500 Arrow lock using just the flight school bonus.
Yeah.
So here, let me get connected to this thing. I don't even want to connect, actually, because I would connect a burner wallet to this. I'm not using real wallets when I connect to these, but I want to go to markets, and then there is the Arrow market. I want to view this Arrow market. And if I wanted to borrow Arrow, I would pay 4.3%. And the way that Moonwell is laid out, I never liked this layout. Like the way that they display data here, you don't see the data that you really need to be able to see in an easy to consume way. So the collateral factor, and they change the names of things too. Like this is your LTV. They call it a collateral factor. And this is your LTV.
It's
so
just,
they call it
common language. It's like, why you got to read the wheel?
Exactly. So the collateral factor is your LTV. The liquidation threshold is your LTV. And this is what we need to know. So now what I'm going to do is I'm going to zoom out from this a little bit to make it smaller so I can screenshot the thing. And so now I'm going to just screenshot this market on Moonwell. And I'm going to go ahead and save this. And this is going to be Arrow Moonwell 1 in my downloads folder. Awesome. So now that I've got that screenshot, I want to hop back on over here to Gemini. And what did we give it so far? We gave it the info about the flight school. We gave it the info about the VE Arrow Maxi Relay. And now I need to give it some info about exiting that relay. So I need to give some info about Vexi over here. So I'm just going to go ahead and screenshot this about the VE Arrow market on Vexi. So after I screenshot this, I'm going to save this one as, let's call it Arrow Vexi 1. There we go. Download, save. Okay, great. So now I'm going to hop back in here to Gemini. And what I want to do is I'm just going to start with the Vexi. So I'm going to start with the Vexi. And all I'm going to say is view this screenshot from the DeFi protocol. And then I want to grab that URL for Vexi and paste it in there so that Gemini has an opportunity to read all about Vexi. There it is. View the screenshot from DeFi protocol Vexi and learn everything about exiting a VE Arrow lock using Vexi. Okay, perfect. And so that's the second to last piece of context that I need to give this. So there we go. Now it knows everything about exiting the locks using Vexy. Awesome. Okay. And so now the last little bit of information that we need here is we need, yeah, Moonwell. That's right. So Moonwell. Now I'm going to throw in that screenshot from Moonwell. And the way that I'm doing this on Gemini is easy for me to share with everyone. But if I were doing this for myself, I would be using Cursor. But Gemini is totally fine for this, I think. So now I gave it the screenshot for Moonwell. And I'm going to say, view this screenshot from the DeFi protocol. And then I want to grab that URL for Moonwell. And that is going to be Moonwell dot whatever it is. Where did that one go? So I've got too many tabs open now. There it is. So got it. Moonwell.
Struggle is real.
I know, man. I know it is. From the DeFi protocol, there's the URL, and learn everything about the Arrow market on Moonwell. Okay, great. Moonywell. Moonywell. Okay, so this should be enough context in the chat. Okay, great. So now, okay, it sees all the information. Perfect. That's good. Okay, now I'm going to say, now, please, in fact, you don't even need to say please. You want to use as few words as possible. Now, condense all of the information in the chat into one output. There we go. Condense all the information in the chat into one output. And I want to just, that should do it. That should do it, because there's only 4 chats. There we go. Aerodrome Flight School and VE Aero Maxi Relay. Perfect. So secondary market, lending and borrowing. Yes, great. Okay, now I'm going to tell it, because this is what we needed. This is the engineering here. So I want to go ahead and just copy this little bit right here, because I'm going to throw this in a, I want to just go ahead and throw this in a text document just so that I can save it. Just have it saved real quick, because I want to manipulate this a little bit. Okay, so now we've got, these are the legs here. Leg number 1, you swap your USDC for Arrow and lock it for 4 years to get the max lock on the VE Aero lock and get that flight school bonus. So that's step number 1. Step number 2 is receive the flight school bonus, exit the flight school lock, that bonus lock, using Vexy, and swap that for USDC. Step number 3 here is deposit that USDC as collateral on Moonwell, borrow Arrow against it. Now, what I want to say is I want this to start thinking about, modeling this a little bit. Now I'm going to say, I want you to model a hedge of a 2,500 Arrow lock that receives the flight school bonus and exits the bonus using Vexy in order to deposit the proceeds on Moonwell as collateral to hedge the Arrow lock that remains on Aerodrome, earning 20% APR. Okay, I want you to model a hedge of the lock. Okay, great, this is good enough. And so now that it's got all the context, it should be able to model that delta hedge and tell us, hey, this is what it's going to look like. Yeah. You'll be able to hedge this amount, but you'll need to add more USDC to hedge the full amount. And really what I want it to drill down on is on Moonwell. I want it to focus on the collateral factors, because you're not going to be able to use that 200 USDC, I don't think, with a 65% collateral factor, and this is LTV. I'm not going to use collateral factor. So with a 65% LTV on Arrow in the Arrow market here, I don't think that you're going to be able to use, even with max leverage, I don't think you're going to be able to use that $200 to hedge the $800.
To fully hedge it.
Yeah, exactly. So you'll only be able to partially hedge it. So so Gemini says, I love the strategic thinking here. Let me go ahead and zoom into this so we can all see this together. Combining Aerodrome's incentive loops, Vexy's secondary liquidity, and Moonwell's money markets is some advanced DeFi block pudding. Well, thank you, Gemini. That's so nice of you. However, yeah, see, I need to be completely candid with you about the reality of the math and mechanics of hedging. While your strategy brilliantly extracts liquid value from an illiquid bonus, depositing these proceeds on Moonwell is Arrow collateral, but that's not what I said. So let's break down the step. Okay, so good. Hopefully it figures it out. First, you lock 2,500 Arrow, deposit it in the relay, it earns 20%. That yield, okay, turns out to be 500 Arrow. Awesome. And you qualify for the flight school bonus. Okay, great. So extracting liquidity via Vexy. So you receive so it says 250 VE Arrow. So that's a hell of a lot less than the 700 that I priced. So
that's off.
Yeah, so it might be hallucinating.
Yeah.
So let's just run with it though. Okay. So and then Moonwell and the hedging. Here's the strategy. So I told it, I thought maybe I wasn't clear enough that you need to exit that Arrow for USDC first. So you don't deposit the Arrow. This would be the opposite. See, yeah, it's hallucinating, but it sees why it's not a hedge. So my primary goal is to hedge it. You need to deposit stables. Okay. Would you like me to model what a true delta neutral hedge would look like? So yes. Yes. Please model the true delta neutral hedge and also change the VE Arrow, that VE Arrow flight school bonus in the model from, what was it? It said it was 200 or something. The bonus.
Yeah, it's 250, but that's not correct.
From 250 VE Arrow to, I'm just going to say 700 VE. 700 VE Arrow. Okay, great. So now with the right size on that flight school bonus, and hopefully it won't hallucinate on the hedge, then we should get some type of an answer here that will hopefully be useful. And then at least you'll know like how much it would cost to hedge. Maybe it's something that you want to do. I hope so. And let's just take a look. Monetizing the upgraded bonus. Okay, great. Yep. And that gets you right around to that $200 that I thought.
Perfect.
Constructing that delta neutral hedge. Okay, great. Go to Moonwell to short it. Awesome. It figured that out. Great. Applying the bonus. Okay, so this is the important part. Okay, so required collateral. Okay, so yeah, the LTV, but that's not. So now I want to change this because I want to use I want to use the max LTV.
65%. Yeah.
Update the model to use. I want to use 60%.
Okay.
To use 60% LTV and potentially loop the short hedge position on Moonwell in order to hedge as much of the original 2,500 VE Arrow lock as possible. Okay, let's see if it figures it out, because it's still got all the context in its window, so it should remember. But Gemini sometimes forgets once you get further down in the chat. So
I hate that. I'm not keep repeating myself.
Well, that's why I use Cursor. I'm just using Gemini because I think everyone will be familiar with it.
Yeah.
But okay, so it says this is where DeFi gets incredibly fun. You're essentially taking a free bonus money, converting it to hard stable coins, and then using a recursive lending loop to dynamically fund your own hedge. By increasing the LTV to 60% and looping the position, we maximize the capital efficiency of the VEGC exit proceeds. That's exactly right. However, and this is the roadblock I thought we were going to run into. However, because Moonwell's maximum collateral factor for Arrow is 65%, see, remember, it is 65%. Running a 60% LTV leaves a very tight safety margin. If Arrow's price jumps suddenly, your short position could face liquidation. Right. So here's the math on how much of your 2,500, this is what I wanted to get to. Awesome. This is how much of your 2,500 Arrow lock you can successfully hedge using only the proceeds from the 700 VE Arrow bonus. Okay, great. So there's that seed capital, 200 USDC. There's the loop engine. Okay, awesome. Here are the numbers. So you'll be able to hedge 963 Arrow. So you'll effectively be able to hedge yourself by nearly 40%. So if you got a 2,500, yeah, so that's better than 0%.
Yeah.
And
and you potentially could add, USDC and further hedge it if you wanted.
You sure could. And
or could you loop?
Well, so this is actually the built-in. This is with the loop.
Oh, okay.
So yeah, so you start with the 212. That's the proceeds in USDC after exiting the flight school bonus using VEXI.
50% each loop.
And then you're basically max looping.
Okay.
As much as you possibly can. And so now, but here's the interesting thing. Here's that net spread. So that net spread is 16%. So you're earning the 20% on the VE Arrow Maxi Relay. That's the long position. And you're paying the 4% to borrow Arrow over on Moonwell. That's the short position.
Yeah.
So you've got an interest rate arbitrage going on here, and you're still a little bit long Arrow. But if you didn't want to be long Arrow, let's find out. So if I don't want to be long Arrow and instead want to be completely delta neutral while still earning the VE Arrow Maxi Relay yield, how much USDC do I need for the hedge? Okay, so in a couple of seconds here, it should figure it out and then rerun that model. And then you'll know after you exit that VE Arrow Maxi lock from the flight school bonus lock, and you get the $210 or whatever, how much USDC do you need to add in order to be able to be completely delta hedged and isolate that yield? Because
it'd be interesting is if there ends up being a market to where you can borrow against your locks.
I'm pretty sure there is. And in fact, I'm almost positive that there is.
Because that would be a way to come up with the liquidity that you need to fully
So check it out, Mike. Only an additional $337 required, but that's at max leverage.
Yeah.
So after you exit the flight school bonus and get 212, then you need to add another 337, but that's at max leverage on Moonwell. You would want to give yourself some room.
Oh, absolutely.
So maybe you use a 50% or a 40% LTV instead of 60. That's going to increase the USDC that you've got to deposit in order to get that done. But you'd be able to really isolate that yield. So yeah, see, it figured it out. You see the crucial word on risk. While highly capital efficient, running a 60% LTV when Moonwell's liquidation threshold is 65% leaves almost no room for error. If the price of Arrow spikes by roughly 8.3%, pushing its price from 33 cents to 35 cents, your borrowed Arrow liability will exceed 65% of your USDC collateral value, triggering a liquidation of your Moonwell position. Right. So this is the risk here. So as long as you use a more conservative LTV of like 35 or 40%, then you could completely hedge yourself and then basically isolate as much of that relay yield as possible. And so I'm just trying to find my Aerodrome tab. So this 20% is what you want to isolate as much of during the bear, which is basically the rest of this year. So, if you can isolate 15% of that and be delta neutral, such that on the way down this year, as Arrow, I expect, continues to dump, then, you wouldn't get hurt by that.
Mhm.
And if Arrow gets down to like 12 cents or 10 cents, then you know what you can do? If you want to get long at 10 cents, close the short. And then you still got your long position, no leverage on the long, so no liquidation problem there. You just close your short position, pocket what you made on the short, and then
Mhm.
if Arrow bounces from there, hey, you got all the yield from the lock that's compounding in the lock,
Yeah,
and then you just profit on the short position on the way down. So
absolutely.
that's how I would play it. If I were messing about with these Arrow locks, that's what I would do. But I'm pretty sure, Mike, there is a protocol, at least one, where you can borrow directly against these locks. I don't know
That,
what it
and
is though.
and if it's a good platform, and then it that might be a good way to come up with the additional liquidity that needed to fully hedge that position.
That is exactly right, man.
And
So here, if I hop on over here to Gemini one more time, um, I'm almost positive that there's a protocol that allows you to borrow against your VE Aero locks. Let me just hop in here, Aerodrome Flight School, and what I want to do is I want to say, please, so search and find the DeFi protocol that allows users to borrow against their VE Aero locks. If it can find this, that will be great because then you can use that flight school bonus just as collateral. You don't even have to exit the bonus.
I mean, you could use your main deposit and the flight school bonus to borrow against to hedge itself.
Exactly. Exactly. Yeah. Yeah. That would be super cool. But if you were to do something like that, then you would be introducing leverage on both legs of that
Yes,
trade. And you
yes,
might not want to do that.
yes.
Um, but that's right, 40 acres. That's right. That's what it was called. So
40
let's
acres
hop.
and a mule. 40 acres
Yeah,
and
man. You gotta hop on out there. Get on that back 40. The
that's
back
right.
40 needs mowing.
We,
Check this
we
out.
promise you 40 acres and a mule.
Check this out. So here's back 40. 40 acres. Oh my God. 26 million in deposits. Man, this protocol has blown up. It's been a long time since I've been on 40 acres. So check it out. If you want to borrow, yeah, see, you don't want to pay 27% LTV. This looks dynamic too. So, not static, like the LTV isn't static. But check it out, Mike. You can use that VE Arrow as collateral, but
Yeah.
you wouldn't want to do that. You wouldn't want to do that
Okay.
because if you use the VE Arrow as collateral, then and you're borrowing, you can only borrow at a 27% LTV, and then Arrow actually does what I think it's going to do, and it goes to 10 cents or lower, you would lose your lock. So, and that
Mhm.
short position would hedge you. It would hedge you. But yeah, I don't know that you would, maybe this would be an interesting way to exit the lock rather than using Vexi. So you see how this could work? You borrow against your locks
Yeah.
and then take what you borrowed, immediately create that leveraged hedge over on Moonwell. And then if Arrow dumps and you get liquidated and you lose the locks, well, at
Uh,
least the hedge would keep you flat.
yeah.
But I don't know that you really want to do that. That's probably not a good idea.
Mhm.
But this is, definitely, at least it's an option. So this is the borrow. Yeah.
Well,
Okay.
I mean, it's a way that I mean, even if it's just something as simple as you want to access that liquidity without selling your lock. You want to keep earning that yield, but you want to access 20% of the liquidity of the lock to buy something else, or to pay for an unexpected expense, or something like that. At least it's a way to access that liquidity.
Yeah, yeah. And so I wonder how much do you? So that's if you want to be a lender, then you can supply USDC. But if you want to borrow, what are you paying? What's the borrow APY? Where does it show that?
What
What it,
is that website?
it's a 40 acres dot finance.
Okay, 40 acres.
Yeah, so I'm trying to find out like if I'm borrowing USDC, what am I paying to borrow USDC? What's the okay, I'll give them a burner wallet. Let's see. Is he going to tell me? No, it doesn't. It's not telling me what the borrow APY is. That kind of sucks. So maybe let me check out the documents here. Where's their docs? There's the docs section. So let's check out the docs for 40 acres finance, because if you can borrow for nothing over on 40 acres, that might maybe not be horrible. It's
Are you
just
looking? Are you looking for USDC?
yeah, I want to know how much you're like. What's the borrow APY?
For USDC is 5.29 APR.
I don't think so. I'm pretty sure that so here if I'm sharing the 40 acres site here, Mike, and then you take a look and you see where does it say a borrow APY? If I click on lender, I can
See here.
save.
See, here's the lending. It's 5.29 APR.
Right, but that's the opposite side of the trade.
And
That's if you want to supply USDC, you get paid.
then the
Um,
borrow is borrow USDC. Here's the loan to value.
it doesn't show it.
Well, let's ask. Let's see. Let's ask. Well, here, let me take mine down and put yours up, and I will ask AI. What is the borrow APR on 40 acres finance to borrow? And you were wanting to borrow USDC?
Yeah. So I the way that I would go about finding it would be in their documents, in the 40 acres documents. But this is a huge red flag. Their documents suck. Like,
Yeah, yeah.
that is
I,
a
I've never used this platform, and I wouldn't suggest it to anybody until I did.
no. This is like, yeah. This is a big red flag, and I can't believe that they've got $30 million in TVL just in the aero market. That's amazing.
Well,
Um,
this is what it came up with. It says the borrow APR or interest rate on 40 acres finance appears. Oh, okay, the borrowing USDC using VE Aero locks as collateral is 0%.
Yeah, yeah. You know why it's 0%? Because Arrow is so volatile that they just take the locks, I bet. I bet that's how they've been able to accumulate a lot of that TVL is just people getting liquidated, people depositing the locks, and you
It's a
know,
revenue-based finance protocol, the base network. It says loans are interest-free, self-repaying, and non-liquidating.
yeah, they don't describe any of that in their documents though.
Yeah, I'd be interested to maybe we need to do a deep dive on this. But it's I've heard of these types of platforms that supposedly they don't liquidate people, but I don't understand how that would work.
No, so this place is going to liquidate the hell out of you. But we gotta understand how this works, because maybe I'm just misunderstanding how this 40 acres protocol works here. Um,
Well, let me
so
give you the bullet points it gives. So it says you use your VE Arrow, your vote escrowed Arrow locks NFTs as collateral to borrow USDC instantly. Repayment happens automatically. Each week or epoch, a portion of your VE Arrow voting rewards from Aerodrome protocol fees and incentives is used to repay the loan, principal over time. That's interesting. No traditional interest accrues. The cost is effectively that the share of your future rewards goes to repayment instead of to you, plus
Oh,
plus any protocol fees like a cut of rewards to lenders, for example, 20% in some descriptions.
oh, that's
From the docs,
horrible.
40 acres loans are self-repaying, non-liquidating, and interest-free. Benefits include keeping your VE Arrow exposure, no need to sell or unlock, no liquidation risk, and flexible repayment, auto or manual. So,
Wait, so hold on a second. That's really cool. How can they offer a product that can't liquidate you on the downside? Like let's say that, Arrow goes from 30 cents to 3 cents
yeah.
and you borrowed at the max LTV against it in order to fund the short. What happens to your lock? Like, why would you not get liquidated?
Well, basically, it's saying that, and I would guess it's because, well, I won't comment on that because I don't understand it fully. But what it is doing is, regardless of what the price does, you're consistently paying. Your weekly epoch yield is going towards the principal, and you're basically. I mean, you still own that lock, but that lock is locked in with them to where until that principal is paid off. There's no interest accruing or anything like that. But
So so you can't exit the loan.
yes, that would be my understanding. That's my guess because that's the only way that this makes sense.
That does make sense. So if you can't exit the loan, then they're just going to keep your lock. That's actually not a bad idea. That's not a
Well,
bad idea.
because on the downside, it's going to pay off that principal slower, but on the upside, it's going to pay it off faster. And once that principal is paid off, then you can do whatever you want with that. So
So Mike, you see in the chat, Snowsies is talking about that Steven fella. So that's Steven TCG. He is the OG boss of DeFi recursive lend borrow stuff
okay.
like looping and fixed income. He's big shout out to him, man. That guy has put out some amazing content. So this type of position, if you believe in Aerodrome and the Arrow token, and you're willing to hold through a big drawdown, and you might want to be able to hedge yourself, this protocol would actually be a great way to do it, because if you know that you can't get liquidated at the bottom, and all that means is all of your yield is going to go to basically just repaying the borrow. But if you believe that Arrow is going to rebound at some point, maybe at the end of this year or next year, well, then if it does end up rebounding and you were able to borrow against it now to hedge yourself, and it does dump, then you just exit the hedge after it dumps and then hold this long position and wait for a recovery, which is what you were going to do anyway. But you don't have the liquidation risk on the downside. So that's actually really, really good, man. You might consider using this 40 acres protocol. Really got to understand how their liquidation system works. If you really can't get liquidated on the way down because they just lock up your VE Arrow lock forever until that Arrow yield pays off your borrow. But if the Arrow token recovers, then your borrow vanishes. So because your collateral becomes worth so much more.
yeah,
So then it's like, well, if you can't get liquidated on the way down, but you want to hedge yourself on the way down, then just borrow against your own lock using 40 acres, set up that recursive looping hedge position on Moonwell, and then just hold that for the next year. And then that way, at least you're not just going to be sitting helpless as those Arrow tokens in those locks, are down potentially 90% from here. So I kind of like that play.
I honestly, like, what I'm looking for right now is I'm looking for there we go, X. I want to follow them because I'm thinking about messaging them and seeing if they'd be willing to come on the show.
That'd be awesome.
All right, I'm going to send them a message. Why don't we jump into we got about 10 minutes. Let's jump into a lesson real quick. and I'll type them, shoot them a message and see if they're willing to come on.
Perfect. Yeah. Here, let me go ahead and pick something out for us. All righty. I kind of want to take a look over here at courses. Oh, you know what? I'm on the wrong internet. Let me hop on over to the Starlink. Give me 1 second, Mike.
Why is it not giving me the option to message them? That is a red flag. Well, then I will do this.
Okay, there we go. So now all I want to do here is hop on in to courses.defiuniversity.xyz, and I just want to go ahead and share that tab so that we can take a look at this. There we go. And let's take a look at, because I saw a bunch of people in the chat talking about liquidity provision. And liquidity provision is not structurally profitable. So I just wanted to be able to talk through that a little bit here, because for the vast majority, I even say maybe 98 or 99% of full range LPs and concentrated LPs, the pools themselves don't have a positive variance risk premium. So you're structurally unprofitable as an LP. So I want to just go ahead and take a look at some liquidity provision stuff. Why don't we take a look maybe at impermanent loss? This is your gamma risk. This is the cost of your volatility. So let's go ahead and take a look, Mike, in the last couple of minutes that we've got, the hidden cost of high APYs. And remember, you guys, this stuff is all free. It's in DeFi University. Over the weekend, it's going to be in the Node.pro. So no excuse for not building a skill set,
Welcome to The Explainer. Today, we're going to talk about something in DeFi that could save you a whole lot of money. It's a hidden risk that can turn what looks like a massive win into a surprising loss, even when you're being promised triple-digit returns.
You've seen these, right? These incredible returns advertised on liquidity pools, 100% APY. And you think, wow, this is the dream. It looks like the easiest money you could possibly make in crypto.
I know, it sounds completely backward, impossible even. But for a lot of people providing liquidity, this is a very, very harsh reality. And this is because of a hidden villain in our story, a concept called impermanent loss. It is, without a doubt, the single biggest risk that most people just don't understand, and it can absolutely wreck those amazing profits. Okay, let's dive into exactly how it works. So what is this thing? What is this invisible force that seems to be working against you behind the scenes, even when everything looks like it's going great? So, at its core, it's really an opportunity cost. It's the price you pay for the privilege of providing liquidity. And here's the key. It gets triggered anytime the price ratio of the two tokens you put in changes. Any change, up or down, an impermanent loss starts to kick in. And here's the real gut punch. The core mechanism is the exact opposite of what any good investor wants to do. As one of your token's prices goes up, the pool, well, it automatically sells it for you to buy more of the weaker token. It's constantly automatically rebalancing against your best performing asset.
Theory is one thing, but let's make this tangible. We're going to walk through a real-world example to see exactly how this process can quietly drain value from your position step by step.
All right, so let's say we start here. A nice, simple 50-50 deposit into an Ethereum/USDC pool. You put in 1 ETH, which is worth $2,000 at the time, and 2,000 USDC stablecoins. Your total initial investment, $4,000. Easy enough, right? Okay, now the market moves. ETH has a great day, and its price jumps up 25%. On all the big exchanges, it's now trading for $2,500. Well, this creates a price difference between the market and your little pool. And traders called arbitrageurs, they immediately jump in to profit from that gap.
Okay, so this is the core reason why providing liquidity is structurally not profitable, because of something called toxic or informed flow. So toxic flow, informed flow arbitrageurs, those arbitrageurs, they, if you can see price moving on Binance before price moves in a Uniswap pool, that Uniswap pool price is old, it's stale, because the pools are not smart. The tokens in the pools don't know what the price is for those same tokens external to the pool. There's no oracles connected to these pools. So the only way that the pool knows what the price is via traders buying and selling the tokens in the pool. And the traders buy and sell those tokens in the pool against a third-party source like Binance or Coinbase or a DEX, maybe just an external source. So here's the problem with liquidity provision. It's not just that you've got to fight toxic flow. That generates that short gamma. That's your impermanent loss. Your gamma, your short gamma, that is your impermanent loss. It's your cost of volatility. And it's really driven by arbitrageurs. But it gets worse than that, because the volatility for the assets in the pool is almost always lower than it is for those same assets external to the pool. So that means you've got a negative variance risk premium. And that means that you're structurally unprofitable in two different ways. The only way that you can be profitable as an LP is if both of the assets in the pool are extremely tightly positively correlated. So basically, you've got to be in a pool like the one I'm in with gold, like on Uniswap v3 on mainnet. It's just PAXG paired with XAUT. And so if you can eliminate that gamma risk, if you can damn near eliminate that impermanent loss, then that means the fees that you earn are much, much closer to actual yield. But when you earn fees, when you're providing liquidity in, let's say, a wrapped ETH USDC pool, those fees, it's almost like you are the yield. So I think that, understanding impermanent loss and, a toxic flow or informed flow and variance risk premium, if you understand impermanent loss, toxic flow, and variance risk premium, those three things, you will then understand why providing liquidity is structurally not profitable for 99% of pools out there.
Which forces your pool's price to adjust. And to keep its 50-50 balance, the pool automatically sells some of your precious ETH for USDC. So just look at your new holdings. You now own less of the asset that's going up in value, ETH, and more of the stablecoin. The pool literally sold your winner for you.
So at this point, you might check your dashboard. Your position has grown from $4,000 to almost $4,500. I mean, on the surface, that looks great. But here comes the crucial question. What if you had done nothing at all?
Had you simply held on to your original 1 ETH and 2,000 USDC in your own wallet, your portfolio would actually be worth $4,500. That's right. By doing literally nothing, you would have made more money. That difference, that $29, that is your impermanent loss. In this scenario, you lost $29 of potential profit compared to just holding, even while the price of your main asset was going up.
And what's really scary about this is that the loss isn't linear, it actually accelerates. Just look at this table. A 50% price change, up or down, leads to a nearly 6% loss versus just holding. But look what happens when the price doubles, a 100% move. Your loss skyrockets to 20%. It's an incredibly powerful force working against you.
So you're probably thinking, if I'm always losing value compared to holding, how can this ever be profitable? And that brings us to the central conflict, right? The tug of war that's at the heart of being a liquidity provider. This is it. This is the entire ballgame. It all boils down to one simple question. Can the profits you make from trading fees actually outpace the losses you're taking from impermanent loss? Let's see how that math plays out.
So let's put some numbers on this. Let's imagine your position earns about $1,100 in fees over a year. Now, if the price of ETH only moves about 25%, your impermanent loss is just $200. You're still making a nice profit, but look at that bottom row. If ETH doubles in price, your loss hits $2,000, which completely wipes out all your fee income and leaves you deep in the red.
Okay, so knowing the risk is definitely the first step. Now, what can you actually do about it? How do you tame this beast and protect your capital? Well, before you even think about depositing a single dollar, you need to look at three things. First is volatility. The wilder the price swings, the worse your impermanent loss is going to be. Second is correlation. Do the two assets kind of move together, or do they go in opposite directions? And third is time. The longer you're in a pool, the more time prices have to drift apart. So, what's in your toolkit to fight back? Well, the simplest strategy is to just stick to stable pairs, like USDC and USDT, where the prices barely move. A more advanced move is to use correlated assets, like two different forms of ETH that move together. And for the real pros, you can use things like concentrated liquidity for higher fees, or even hedge your entire position with derivatives to try and neutralize the risk. But hey, just when you think you've got a handle on impermanent loss, there's another version of it. It's more permanent and frankly, a lot more dangerous. It's what the professionals are really worried about. It's called loss versus rebalancing, or LVR. Think of it this way. If impermanent loss is impermanent because it can technically reverse if prices go back to where they started, LVR is a permanent scar. It's the value that those arbitrage traders are scraping away from the pool every single time they rebalance it. That value never, ever comes back to you. It's a one-way tax you pay to the fastest players in the market.
So I guess the crucial takeaway is this, that giant APY is not a free lunch. You always have to calculate the potential loss from price movements before you start chasing that promised yield. Your goal isn't just to earn fees. It's to make absolutely sure those fees are enough to beat the hidden and sometimes permanent costs of playing the game.
Yeah, man. So with that, Mike, I think we have run out of time here. But, I was taking a look in the chat, man. And, dude, Snozy's putting in some fire in that chat, dude. Yeah, man.
I mean, he's always rapid firing in the chat, but yeah, but it's all good information. It's stuff I need to check out. But the thing that I was wanting to kind of address is he mentioned, where was that?
So one other thing, Mike, you see, not Scoot Boy said, but not all impermanent loss is bad. I use LPs to DCA on the downside, but Scoot Boy, you got to think though, man. Like if you had just done nothing and just held your assets, you would have been able to buy more of those assets on the downside rather than depositing them in the pool. So that impermanent loss is never good. It's always a loss, either up or down. So the only way you beat it is if your fees compensate you for it. And most of the time they don't. In fact, the vast majority of the time they don't. So liquidity provision is a losing game for the most part.
All right.
Yeah. I mean, that's just what it is, man.
Yeah.
Yeah. And maybe we can talk about variance and variance risk premium next. So really got to understand the impermanent loss concept and what being short gamma actually means. And then we've got to understand variance and why you need high volatility in the pools. And you don't have that. So you're paying this cost of volatility every day, and you're not getting, there's no structural premium built in to being an LP. And so Snozy's saying, do you guys ever do liquidity pools? Yeah. Yeah. I used to for years and years and years, but no longer. I've got like one LP open, and it's a gold LP, which I think is basically a replacement for spot that pays some yield. Yeah, no, man, like basically ever since Gemini 3 came out in late November, I was able to use that deep research mode that it's got to validate what my gut was telling me as an options trader, providing liquidity full time and living off of it. My gut was telling me that not only was I not making any money as an LP full time, but I was the yield. And the reason why my gut was right is because there is no positive variance in those pools. And number two, your cost of volatility, that gamma, is almost always greater than your fees, which is your theta. So yeah, it's Snozy says yes and also no. But yeah, man. So we could talk about this some more maybe next week. What do you think, Mike?
Oh, absolutely, absolutely. I think it's important for people to understand, when they're entering in these liquidity pools, to fully understand the mechanics, so that they can, properly hedge, and make sure that they're being profitable. Because otherwise, like you said, you're the liquidity. So
Yeah, yeah,
you're bleeding liquidity. You're potentially bleeding, your exposure to these assets. So. Well,
yeah.
David, as always, I appreciate it. Chat, and Snowsies, I appreciate the hell out of you. Dropping the alpha in the chat. Freaking by all means, keep doing it. And we have a show tonight. Me and Jeff will be doing Crypto and Chill at 5 p.m. Pacific, and we'll pick this up again next week on Monday, 9 a.m. to 11 a.m. Pacific, noon to 2 on Eastern. So until then,
And Mike, my plan on Saturday, bro, tomorrow is to finish building out the Node.Pro. I
yes.
think it's going to look good, man.
Yes. And actually, I want to do this real quick for everybody that's watching. If you could, let me share my screen. Do us the huge favor of, since we don't have a YouTube account yet, and we're using DeFi Crypto and Airdrops and DeFi University, if you could follow us over on X at the Node channel, just follow us over there so that you can help us grow this channel. Once we Google and YouTube lets us get a YouTube channel up, we'll do that. But like David was saying, this I think is going to end up being the place to watch us, is the Node.Pro. We're going to have all the research links, while we're doing the live show. I'll be dropping them into here. So if you want to take a deeper look at any of the news articles I'm referencing, you can do that here. You can watch us. And this live terminal is going to have all of our socials, the chat, a unified chat where anybody that's chatting on X, Kick, Twitch, Arena, YouTube, they'll all be in this chat, and you'll all be able to talk to each other. So this is going to be the unifying force of bringing everybody together in one place.
Hell yeah, it's going to be awesome, man.
Awesome. Well, we'll talk to you later tonight, and until next time, Veteran Crypto out.
Peace.